Hi, my name is Kris Venezia. Today I'm going to be talking about investing with the US election coming up. I talk with clients and they're constantly asking me questions about the election and the impact and what they should do with their portfolio and what I'm doing with their portfolio. So I decided to do a video kind of going over investing with elections happening. And of course, one of the first things that happens when I'm talking to clients about the election is they're talking to me about the candidate who they're supporting, and they have concerns about the candidate who they're not supporting. And look, there's a lot of election propaganda out there. Both candidates want you to vote for them. So there's going to be a lot of literature and social media posts and commercials about, you know, the economy or investing or what's going to happen. There's that common cliche that happens where if this person gets elected, 401k is going to go into the toilet. So I want to talk about, how we view it, how we kind of play through it on the investment side and really just kind of give an overview, maybe hopefully calm some fears around your portfolio. Look, I can't do politics. I'm not a politics guy, financial guy. So in terms of policies, all that stuff, I'm not an economist, so there's plenty of economists talking about the different proposals and all that stuff. This is purely just investing, going about investing, doing that with an election coming up. So getting back to that first question that comes up is people say, if my person wins or if the other person wins, stock market's gonna go up or down. So I always usually start with this chart, which shows how the S&P 500 has done during various presidencies. Very well done. Chart here, blue Democrats, red Republicans. You can see that in both Democratic and Republican administrations, we've seen stock market gains on the S&P 500, which is a major, stock market, which is a major index in the United States, 500 large U.S. companies. So you can see, look, there's periods. Obviously, younger Bush, some would say he drew a tough straw with, the dot-com bubble at the start of his presidency and then the housing crash at the end of his presidency. But you can see overall, for the most part, the stock market has gone up under both Democrats and Republicans. So when people say, if a Republican wins or a Democrat wins, I have a bit of a difficult time with that because historically, just looking at how it's gone, we've had success investing with both Democrats and Republicans. There's not an overwhelming, well, when Republicans have been in office, they've done better, or Democrats have been in office, they have done better. So that's typically, the first place I start when we're talking about elections and what happens during elections. And, I notice the next thing that comes up is people say, well, yeah, maybe that's in the long term, but in the short term with an election year and what happens after the election year, you're going to see a lot of volatility and it's going to be really hard for the stock market to do well, during the election year and after the election year. And so when I go to this chart, which kind of illustrates that, and I like the way this breaks it down, but it's showing you, the lead up to the election, full election year, year after the election. And if you look at it, once again, there's Democrats, there's Republicans in here. If you look at where we've had our issues, right? 2008, I don't know if that was necessarily the presidential election. There was a giant housing crisis happening. 2000, I don't know if 2001 was necessarily election related. It was more of a dot-com bubble bursting. So for the most part, when you look at it, going up to an election, and once again, this year so far has been the same. It's been a very good year for the S&P 500. But also, if you look at the year after an election, that tends to be an okay year for the stock market as well. And the S&P 500 historically, we say around 9 to 10% going back after World War II is that average annual return. And you see here that median return is right in that sweet spot of 9.8%. Tells me there's not necessarily anything out of the ordinary the year after an election year. There's not a big drop off the year after an election year historically. So once again, when people say, hey, this comes up, people say, hey, let's sell our stocks and let's wait to see where the dust settles and then get back into the stock market after the dust settles. Well, once again, looking at history and looking at what the probability would be there, most likely you're going to put yourself in a position where you're not going to be successful if you wait, because most likely you're going to be waiting too long and you're going to be missing out on some positive returns. Obviously, it's probabilities. I'm not from the future, but historically looking at it, that tends to be the trend. And then the last thing I like to bring up in terms of elections is a lot of people during calls will say we have to invest in X sector, right? I know this person's going to win. I know if they win this sector, it's going to do so well. It's going to go crazy. Do I have shares of this particular stock or particular sector? And this one I talk about a lot with clients. It's one of the harder ones. I think it's a harder one for a lot of people to believe, but the truth is, if you look back over the last few administrations, you know, the one that always blows people away is you look at energy XLE. So that's an ETF that holds oil and energy stocks did really well under Biden, and they didn't do as well under Trump. One I kind of like to bring up is marijuana. Everyone thought marijuana stocks would do really well when Democrats, had the House, the Senate, and the White House after the 2020 election. And marijuana stocks, if you want to pull up a chart, how they've done under the Biden administration, it's been pretty terrible. People say banks. I hear this a lot recently. Banks are going to do really good if Trump wins and Republicans win because there's not as much regulation, and that's good for banks. But once again, you actually look at the real data, and that's not particularly the case. Obviously there's some outliers here maybe, but overall, that trend doesn't hold. This idea of this person wins, this sector is going to do well. In the last couple of administrations, people have been burned kind of taking that route, whether it be marijuana, whether it be energy during the Trump administration, even banks during the Trump administration. And the real reason for that is, overall, the way the stock market works is it goes up over time because companies make more money. Companies are fantastic at finding ways of making more money. I always like to kind of put it this way, if Trump or Harris is elected, McDonald's is still going to sell hamburgers. They're still going to keep innovating and coming up with things like the chicken Big Mac. Domino's is going to come up with new wing and bread and pizza ideas. Chili's is going to continue selling me chips and queso and salsa, which, now that I'm getting a little bit older, I don't get to enjoy as much. But, when you really look down at it, businesses themselves are going to, in a lot of ways, continue finding ways to make money, to keep selling things. And that's how the stock market, that's the reason why the stock market generally goes up, is because over time, businesses find ways to make more money. If you invest in those businesses, they grow, your share of the investment grows with it. And I think the last thing I'll say, just kind of hitting on that point, because right now I know there's a lot going on in the world. There's an election, there's certainly conflicts happening in different parts of the world. Inflation is coming down, but we just went through a period where it was higher than expected, and it's still above the level where we'd like it to be. Once again, if you look back over history, we've had a lot of periods where a lot of difficult things have happened, and the stock market has still managed to power through. Once again, going back to that idea of businesses continue to find ways to continue growing their profits and making more money. So I think all of this really goes back to, we don't want to ruin our portfolio. We don't want to, ruin what our goals are financially because we get fixated on one event or we get kind of fixated on some negative news, right? It should always go back to what is the goal, right? Why am I putting this money to the side? When am I going to need this money? What gives me the best chance of success over that time period? If you're 30 years old and you're putting money in a retirement plan that you're not planning to touch for 2 or 3 decades, you got to invest with that 2 to 3 decade mindset and that thinking of what's going to make me the most money in the next 2 to 3 decades. You should not be sitting there and saying to yourself, what's going to happen next month, next week. There's going to be downturns. There's going to be tough months and tough years. 2022 is a tough year. I talk about that with clients now, clients who were panicking in 2022, and now it's like 2022 never happened. 2020 was a crazy year. A lot of stuff happened in 2020. And you look back at 2020 and how the stock market did, and what was I don't know, in my opinion, a pretty bonkers year of global history. once again, the stock market went up, despite all of this stuff you see on this chart that happened in 2020. So I know elections, there's going to be a lot that happens from the election. I know personally there's a lot of personal investment with election and who wins, but bringing it back to what we're doing and financially, investing, what our goals are there. Certainly just want to emphasize, don't blow up the portfolio because of an election year. I'm not from the future, but probabilities and history kind of tells us that, regardless of who wins this election, there is a good chance that the US stock market will do well under that administration. It's not a guarantee. That's just historically, most of the time, whoever's been president, like I said, US companies, they just find a way to keep making money. So you invest in those companies and certainly you get to share in some of those spoils. So once again, Kris Venezia, advisor at Eckman Wealth Management. If you disagree with anything I said, if you have questions about anything I said, put in the comments below. I can take it. If you got criticism, happy to answer any questions below as well. Outside of that, thanks for watching, and make sure to subscribe and look out for other videos from Eckman Wealth Management.